Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today in the markets, folks, we saw a lot of drifting lower in the markets, except for the last 10 minutes of the day. The spiders ripped up and created a positive outcome on the day. Truly impressive. Now, guys, tomorrow, the PCE data is going to be announced. This is the last piece of data that we get before the Federal Reserve has the FOMC meeting next week, where they're going to determine if they're going to cut rates or not. Currently, we're at 87% chance that we will cut rates. And you may ask, how do you trade this? Guys, tread lightly. Wait for this announcement to come next week, and it's going to come during the press conference on Wednesday. So once we get that information, respond to the trading then. I expect volatility to occur. Be charting out your support levels. This show, we'll go over those on some of the stocks to keep you ready and eager to get into some new opportunities come next week. All right, guys, so let's see where the markets shaked out today. And you can see here on the market summary board, Dow Jones down 0.3%, Nasdaq up 0.22%, S&P 500 eked out a gain. As I said, they were down most of the day. U.S. oil had a nice pop up 1.12%, still consolidating in the same range. Gold basically flat, up 0.12%. Bitcoin down 1.16%, still chopping around that 50% area of the parallel channel. Next up, we've got the S&P 500 heat map, and we see here NVIDIA bouncing right back. Nice gain, 2.11%. Apple selling off slightly today, down 1.21%. Google is down 0.63%. Meta had a great pop there, up 3.43%. They did convey that they will be cutting expenses for the metaverse, and investors were quite happy about that, as there was a ton of money going into the metaverse that really didn't materialize that well. Oracle up 3.18%. CRM Salesforce up 3.66%. APP did get up near $700 today. Was a nice push on APP, but closed down here near $683. Other than that, you see a lot of mixed bag because most of the day was on the red side, folks. So let's see what happened in the spiders, the S&P 500 ETF. And as I said with the 10-minute chart, look at this. We are all trading back down inside this parallel channel, except for this last 10-minute candle pushing us right up on top of the parallel. So you go back to the daily and you see what this is, folks. This is just kind of a lighter volume from the Thanksgiving holiday float right up on the charts, just pushing higher, just briefly pushing. And as I've said, the volume here, guys, is light. So the volume's light. That tells me the institutions aren't really hanging around, or at least jumping on board. Now, the institutions where we do see them are really small parts throughout the day, like these two red candles on the 10-minute chart where we see sharp selling pressure, or right out the gate, sharp selling pressure, institutions step away, sharp selling pressure, they step away, and then they just go on lunch break for a couple hours, and then they step back, selling pressure, markets lift right back up. But all the while, it's just not a heavy volume market at this time. I was anticipating a lot more volume at the first 2 weeks of December. Potentially we'll get that next week when the FOMC comes in. That's going to be your help for guiding you on your trades once the FOMC is released. Watch the volume, watch the conviction. That will help you get on the right side of the trade. Next up on the Qs. The Qs here, they did put in a down day ever so slightly, down 0.09%, really chopping around from this incredible float that's happening, just like on the S&P 500. We did tag the resistance here today, $624.97. So for at least in the near term, this should be an area of contention. We could potentially chop sideways before potential next week, either plunge or a surge with the FOMC announcement. Mainly what we're going to be looking for, if the percentages stay the same for the cut, we're going to be looking for the dialogue in the conference. What sort of language does Jerome Powell have? Is he hawkish? Is he dovish? What is he going to describe for the future of potential rate cuts and inflation in the economic environment? All right, so next up, we got the SMH on the daily time frame here. It did put in a down day today, down 0.76%. Still doesn't damage the chart, trading amongst yesterday's daily candle. Topside resistance up here at $371.50. Lower side support will be at this 50% area, the parallel at $348.41. Now, guys, here's the chart of the day. And I've been talking about this for a while. You know what does benefit and who does benefit from cheaper rates? Well, it's small cap stocks, folks, and small cap stocks really lifted off today. There was a long period of light volume in the market, mainly over 10:30 to about 2 o'clock, where just most small cap stocks like Rigetti or QBTS, some of these quantum plays were just drifting higher and continued to push higher. Even OKLO was doing the same thing. It was like we were getting right back on board with this AI and data center driven play, even with the quantum space. It's all in that tech in new spec money plays. So is that going to continue into next year? Next week, we are really going to find out. Are some of these stocks going to see some pressure, or are the IWM going to continue to excel? And if it continues to excel, we're going to see right here, folks, you can see IWM resistance would be brand new all-time highs up here at the bottom end of this parallel channel at $258.76. We're right there at all-time highs today. We got very close to tagging it, but we did retreat ever so slightly. So that makes me take this resistance level of $250 right off the chart. Next one's going to be up here, as I stated, at the bottom of that parallel channel. Next up, Bitcoin. Guys, I want to zoom in on the 10-minute chart to show you how cool this is. So we see, and we described the other day how when Bitcoin broke out above the 50% area of the parallel, came back down, retested, bounced, got a nice bounce and elevation up, tagging the $94,000 level before coming back, bouncing, plunging, and then recovering back to the top. It all has to do right here with this technical analysis on the charts at this 50% area of the parallel. Really interesting stuff. For the while, though, Bitcoin is still saved on this bullish momentum. We haven't confirmed above in the top 50% of this parallel, which I'll still be watching for. But right now, if we put in consolidation and trail this 50% area, that's going to turn out to be a lot like the consolidation that occurred back here earlier this year. As you see, we tagged and just played all around this 50% area, even looked like we were about to start breaking down before elevating back up on the charts. I kind of anticipate a lot of this choppiness to go on for the next couple weeks on Bitcoin, since we have seen a very nice decline on that over the past couple months. Next up, gold. Gold, as you see here, it really just kind of moved sideways. So the bad news for gold, we're back down in the lower 50% of this parallel. The good news, this is bullish consolidation. So we have a little bit of mixed signals going on today. Going to have to check back tomorrow and Monday on the charts to get any new pattern developments on gold. But right now, it looks pretty good. Bullish consolidation. That should bode well for a potential move higher as long as this pattern doesn't break going into next week. Next up, silver, guys. Man, look at this. Silver still staying on the top 50% of this parallel. That's the good news. Bad news, nice red candle today. But you notice this could be consolidation, building momentum for another move higher. I'll remind you folks about the monthly pattern here on silver. Look at these sharp moves up are met with sharp moves down. Sharp move up, sharp move down. We're now experiencing the third sharp move up in the last 40 years, 50 years of silver. Will we have another sharp move down? Well, history tells us we should. It's just a matter of when. And, I have the next resistance level, should we continue moving higher on silver, right up here, about $62.30. So be watching for that. That could be the conclusion of this near-term bull run on silver. We'll find out in just maybe a few weeks. Next up, we've got U.S. oil. U.S. oil, the longer this consolidates like this in this diagonal declining manner, the more this looks like bullish consolidation. The one thing that we need to get over is this big red candle. And I've reminded you guys about that probably enough now. So it's been drilled into your head. Right around $61.10 will be that level U.S. oil needs to beat in order to get higher on the charts. All the while, this is still a pretty nice period of consolidation on the chart of U.S. oil. Does look like it is going to attempt to start moving higher in the near term. How much? It's likely going at least to $61.10. Next up, Nat Gas. Nat Gas, nice breakthrough this March 2025 pivot high at $4.92. Now closing the day here at $4.95. Now, if we get another continuing move tomorrow, pushing up above today's daily candle, that will actually continue momentum and increase probabilities for us to run up to the top end of this parallel channel for the next resistance at $5.48. If you do look at this too, notice the RSI on the bottom of the screen. We've got some negative divergence going on here. Negative price, negative decline on the RSI, but we've got positive price action up here on the top of the charts. That's telling us that likely we are going to be due for a little bit of downturn in Nat Gas, but beware. There are times when we do have divergence where price can simply float for a little bit longer than anticipated and then poke the RSI back above 70 before it falls again. That could be a scenario where we tag the top end of this parallel channel. So just be cautious about that. Even though it does show that we should start coming in a little bit on nat gas, there still could be a little bit more gas in the tank to push us up a little bit higher. So interesting chart in nat gas. Definitely has made an incredible run, as you see here on the weekly chart. All of these green candles elevating nat gas's price. Next up, we've got the VIX on the daily time frame. Guys, look at this. Complacency getting lower on the charts, getting in the realms of where we were August through October, guys. So, and really, if you stretch that all the way back, even in July and June. So this is getting really low, making folks appear to think that there's going to be no volatility in the markets. But I remind you, we got the FOMC next week. Depends on what Jerome Powell has to say, whether it's hawkish or dovish. If he's hawkish, I imagine this VIX is going to spike up very nicely on the charts, and the VXX is the volatility measure for the S&P 500 index. The VXX is the vehicle in which you can play. So I do your analysis on the VIX first before getting into any play on the VXX. Next up on Dollar General. Guys, Dollar General reported earnings this morning. Look at this beat. Earnings per share up 35.44%. Revenue up 0.31%. And Dollar General excelled up on the charts, up 14% on the day. Great break on this chart. Now, what I want on this weekly time frame, still displaying this declining trend line to illustrate the breakout that occurred. You would almost think on a breakout and anticipate another retest of this area, the declining trend line, but it didn't do that. That showed you how strong Dollar General's chart is. We had one little retest after a minor break here, but there wasn't much upside before the test. I was expecting a more curl over here. The only place that it did so was right here when the selling pressure took price right down to the point of breakout. Sometimes that occurs. And I bring that to your attention because when stocks are hot, when stocks can be moving up higher on the charts, sometimes these breakouts happen where we have a breakout and it doesn't all the way come back down to the trend line. But just remember, sometimes price will come right back down to the place that it broke out. And that could be an opportunity to at least get in with a small portion of your portfolio. Say you staggered out several different ads for this potential play, and then you may have one entry here. Once it comes down to that level, if it goes lower, add another entry. And then if it goes even lower to the trend line, then add your last entry at that point, pulling your average down. But there's many ways to play this. The most aggressive way for this chart to work would have been to play right at the consolidation area when price retraced to it at that point. But nonetheless, great move on Dollar General. Should this momentum continue, we're going to be looking at $140.98 for a target on the way move up. Now, if we do start falling, be watching this $100 area. Notice how we had some retest just under 100, right around $96. That will be the area of support on the downside. Next up, iRobot. iRobot, as you see here, we got a couple viewer requests. So thank you guys so much for watching and also commenting. It really helps make this show all around a lot better. So you see here on iRobot on December 3rd, we had a great push up. Today, we took a day off. It's not ending or ruining this momentum. We're simply trading amongst yesterday's trading candle. Also, we closed in the top 50% of this candle. So that bodes well too. We could start consolidating and gain momentum for another move up to attack the 50% area of the parallel. One interesting thing about this too, folks, I love technical analysis. Watch what happens when I draw a trend line from this July 23rd pivot high, and then I connect it down through these pivots right here. You notice this pivot here in September. If I cut it through, notice how this is somewhat of a hidden trend line. You know, price went up to it, pierced it today, but then still closed beneath. So yesterday we closed above, didn't confirm and continued the breakout. Today we tried to break out of this trend line and it didn't happen, folks. These hidden trend lines are all over charts, but they're mainly connected from a major pivot to the very next major pivot and then string that price action out. Notice even last time it did get above here, got one candle closed above, then the rest in the following 4 to 6 candles all were underneath that trend line, not confirming a breakout. And even when price tried to push higher here, this didn't confirm a breakout either. So this still tells me this trend line is holding down price. Even though we got all the way up here, this trend line pulled the price right back down to the bottom of the parallel channel. So be watching this if you're a bull on iRobot. This is the line literally to beat if you want to see price go up further, followed by this 50% area at $3.72, and then potentially the top of the parallel around $6. Next up, platinum. Now notice I got platinum on the weekly time frame, all right? So we've got a declining trend line illustrating where price broke out from. Now price broke out and accelerated higher. It didn't retrace. The only retrace that came about was this down week that retested the previous pivots. That just showed you how strong platinum was when it did break out. But what's going on now is a little bit conflicting. We've got a massive weekly topping tail here on the chart. Yes, we had price retreat down to the $1,500 mark and is now back up at $1,648. But you've got to pay attention to this topping tail. That will be the resistance, followed by another technical Fibonacci retrace level at 1758. So 1721 to 1758 is that resistance zone. If we get a weekly close above 1721, that would negate this topping tail, and that would open the door for further upside. This momentum, this consolidation is actually building right here, either for a break up or down. The two things holding it down, the topping tail and this resistance level. Can that be beaten? We'll find out. But this last week's candle, this big green candle, certainly is a great start to beating it. You want to see, if you're a bull, some more consolidation occur right in this range, not get back down under 1550, and then just stay up here and then accelerate up. That's what you want to see if you're a platinum bull. Otherwise, we still are, like I said, somewhat of a conflicting chart at the moment. Next up, we've got Ethereum. Now, guys, we're going over a couple crypto charts. These are a couple of the most famous altcoins in the crypto space too, with Ethereum and Solana. So let's see what's going on with these. Let me back out the chart. This is, again, the weekly time frame. And you can see for the most part, Ethereum has been contained within these two trend lines on the charts. We had a deviation here. We had a deviation here. But on the most recent plunge, we caught support right here above this trend line, and price is now chopping around, trading right in the middle of this wedge pattern, pennant pattern, if you will. So if we're going to continue moving up, the line to beat for Ethereum is right here, just under $3,500. If we beat that under that $3,500 area, that would then release the opportunity for us to excel to new all-time highs. Now, we won't go there in a straight line. There will be a lot of resistance and stops and goes along the way, potential retraces to that trend line. But if you're a bull, you want to see $3,500 get beaten, and that will then open the possibility for a higher push and gain on Ethereum. To the downside, if we break this $2,600 level, we're coming down to $2,100, folks. So beware, be cautious, or at least put some currency in reserves, get some USDC, stack it up and stake it, and then wait for the opportunity to buy more Ethereum if and when price can break and pull Ethereum down right near the $2,000 mark at $2,100. Next up, Solana. Now, Solana has been fighting very hard, folks. It's been doing so, and you know how much I love my parallel channels. Most all of my charts will have a parallel channel. It's because the charts have them all over the place, folks. These parallels, as I've said before, give us so much info. Will this trend continue? Will this pattern continue? Well, Solana's fighting. It's hanging on. It's doing so tooth and nail. So let's see this chart a little bit closer. On the daily time frame, as we see, we've had price now come down, bounce up, and then tag it again. Whenever I have this occur very close to each other, especially being that this is now the 1, 2, 3, 4th, and 5th time hitting the bottom end, that's not very bullish. Now, yes, we're closing up above the low end of this parallel channel, which is positive, but be very cautious for a return down and attack of this parallel channel. This very next time likely will break and pull price lower on Solana. If that happens, this next pivot point just under $100 will be the support. And then you can go down a little bit further on the charts and these pivot points all the way down here. And I know it sounds crazy, but guys, crypto can run. As we've seen here, this cryptocurrency was up near $300. It's now 50% lower, under $150. So the price can go anywhere on these cryptos. So at least be mindful of where they could go. That way you can strategize and get your average in correctly. So again, bottom end of this parallel, $130. Next support, 100. And then following that, we're going to be looking right around $68.18. To the upside, first major resistance right around 175 bucks, followed by the 50% area of this parallel at $228. But also to the upside for the bulls, when Solana catches traction and say Bitcoin does too, it really can run. So beware that you could be having large profits hit your portfolio, which I think we all don't mind in trading. Lastly, we got Amazon, another viewer request, one that popped through right before I hopped on the mic. Really cool stuff, guys. Thanks again for watching live, all you folks out there. So let's check out the chart of Amazon. Another parallel. Big surprise, right? All right, so we've got Amazon here on the charts. Plus, I've got some trend lines kind of helping us narrow down what's going on with the most recent price action. So as you see here today, we closed right on the 50% area of this parallel. We've had a nice move up and then now retracing that move up. All of this, though, is bearish consolidation. Now, notice on this inclining trend line, it's been tagged once, twice, now 3 times. So the next hit is basically a 50-50 shot on if it breaks through or not. Now, since we've confirmed on the top end of this 50% area of the parallel, the odds are actually favoring for price to stay right in this range, maybe trail this 50% area of the parallel and stay up above it. If it breaks beneath, that shows you it's weaker, but then the next support's not far away right here, $225. Should that trend line be broken, then we're talking 209, and then we'll reevaluate from that point to see if Amazon price could eventually get down here to the bottom of this parallel, which is in essence under $200 at $193.86. All right, guys, a lot of charts we went over, a lot of fun stuff to look forward to. As I've said, we've got some more data being released tomorrow, FOMC next week. I can't wait. You folks, thank you so much for watching Trading the Close. Don't forget to like and subscribe. Send this out to your friends and family so they too can learn technical analysis. Hope you guys have a fantastic weekend. Can't wait to be back here on Monday and go over the charts with you. Until then, take care, everybody.